today we shall learn about basic forex skill. My main wish and my aim is for you to learn forex and be so profitable and change your life. Yeah, so in case you're a beginner, this video is actually for you, to help you know what is forex and who are the people who trade forex, how is forex traded, what is traded in forex, and so many more. Remember to subscribe, like, and also share. Once again, you are highly welcome to this channel, and this is Ato Forex. How does forex work? Simple explanation. In forex, currencies are traded in pairs. You'll never find a forex currency is being traded one like this. Forex are always traded in pairs, two of them. For example, you can find euro USD, but you cannot find only euro alone. That cannot happen. For example, euro USD, GBP, and USD and JPY. That simply means that US dollars and Japanese yen. So when you see where there's USD, that is simply US dollars. The first currency is base currency. As in, what do I mean the first currency? Like Euro USD. Euro is actually the first currency. It is known to be the base. It is where there's weight. And then the second currency, it is the quote. That is the USD. And then USD JPY, USD is the base, and then JPY is the quote. You can also find a pair like Audi CAD, that is Australian dollar and Canadian dollar. So Audi is the base, and then the CAD is the quote. This is now the example that we are using. We are going to use Euro USD. This means that 1 euro is equivalent to 1.10 US dollar. That is the Euro USD. You are selling euro to USD, or you are buying USD to euro. If you sell euro USD, you expect euro to decrease and US dollar to increase. Why do currency pairs move? That is also a question. Yeah, these are things that you have to know. Currency pairs simply move because of supply and demand that are being influenced by several things like economic news. This can influence the forex pairs seriously. In economic news, there are a lot of things that happen, which includes interest rates in different currencies, inflations, employment data like NFP. The other factor that makes the market to move, we have central banks. Central banks like Federal Reserves in the US, Bank of England, ECB as well. When central bank raises interest rates, currencies normally strengthen. And when central bank lowers interest rate, currencies also weaken. The other factors that move the market, we have political events like elections. Also, wars in countries can also affect the market. Government instabilities, these are also factors that can move the market. Subscribe and share, like when you are learning something out of this content. In forex market, we have major players. Who are those major players? Major players, these are a specific group of people and institutions that actually moves the market as well. Forex market is not controlled by one person or an individual, but are controlled by institutions and a large number of people. And the market players are central banks. Also, we have commercial banks, multinational companies, and retail traders. Retail traders, these are just only small parts of the market players. Therefore, the retail traders, they just follow the big boys, and the big boys, those are the liquidity makers. Retail traders are just someone like you and me. We also have basic forex terms that you need to know as a beginner trader or a trader in general. We have something known to be lot size. These are things that you should know. In lot size, we have standard lot size, mini lot size, and micro lot size. Let us see them into detail. Standard lot size, you control units of 100,000 of money. Mini lot size, you control units of 10,000. And micro lot size, you control units of 1,000. Another one, we have leverage. Leverage, this allows you to trade with a lot of money more than you have. You may be having some small amount of money, but you want to trade a huge amount of money. Leverage kicks in. Subscribe, like, and share in case I am making sense to you. An example of how leverage works. 1 to 100 leverage. This means that you may be having $100, but you can control 10,000 US dollar with a leverage of 100 US dollar. Leverage can increase profit and loss in the same time. So it has an advantage and a disadvantage. We also have something called spread. Spread is just simply a difference between buy and sell. This is also how some brokers make their money, just from the spread. And then the next one, we have something called pip. Pip is just a smallest price movement. What you need to know as a trader is types of forex trading. We have scalping as a type of forex trading. These are very fast trades. Scalpers, they trade on a very low time frame. Their trade goes so fast, they enter and exit almost within the same moments, in and out immediately, because they're using lower time frame. They normally make small profits in a single trade. This needs serious experience because it is very hard and very stressful. So we have day trading. Day trading, they normally open the trade and close it within the same day. It is popular for beginners. Every beginner normally start as a day trader, and then later on they can change into either scalper or a swing trader, or even remain as a day trader. We have swing trading. This type of trades are being held for days or weeks, but it has less stress and convenient to trade. Why do beginners lose money? There are several reasons why beginners lose money, and that is what we are going to see right now. One of the common mistakes why traders lose money is over trading. When you are trading, you shouldn't enter many times. You should just decide that maybe I will trade once or twice in a day, period. That is it. Don't take more trades than that. If you do that, then that is known to be as over trading, and you lose a lot of money because of that. Zero risk management. They have no risk management of their account. They just trade with any lot size that they want, and also with any amount of money that they want, openly, without putting even stop loss or take profit. Then you find out that their money is gone. Emotional trading is also one of the factors. Someone is trading but almost crying over leveraging. As I said before, leverage can increase your loss or can even increase your profit. But then if you're using leverage without experience, it means that automatically you'll always be seeing red figures, and those red figures will be huge because you have put in leverage there. No trading plan. You just trade anyhow you want. No trading plan can lead to over trading, and can also lead to poor risk management, and can also lead to many bad things in your trade. So when you're trading, you should have a plan when to enter and when to exit. You should know that Forex is not a salary. Some months you may win, but also some months you may lose, even if you are a profitable Forex trader. That is just how the system works. As a beginner Forex trader, what you should learn is how to risk. When you are trading, you should risk 1 or 2% of your trades. Don't risk more than that. Always use stop loss when you are trading. Trade on a clear setup. Do not just trade because you're excited. You should trade on a clear setup. You should know what makes a good setup and a clear setup for you. You should have your criteria, like having around 3 to 4 reasons on why you should take that particular trade. Also protect your capital first. Profits will come later. When you see your trade is going to hit your stop loss, you can close it, because if you leave it until it hits your stop loss, it will drain your account more, making your loss so huge. Is Forex good for a beginner trader? It's both good and bad on different factors. Forex is good for a beginner trader if you learn the skill properly, then it can be good for you. Forex can also be good for a beginner trader if a learner practices on a demo instead of real account. Yeah, you are a beginner trader and you have no skill. Then why are you practicing on real account? You're going to blow your account and lose your money, and it will be so bad for you. Forex can only be good for a beginner trader if he or she starts with a small account instead of a big account immediately after learning. If you have learned the Forex and you know that you are profitable, start small and scale big later on. It can also be good for a beginner trader if you are so disciplined and following your trading rules and plan. Here are the reasons why Forex is not good for a beginner trader. If you want quick money, Forex is not good for you. You should be patient. I know everybody wants money, but don't want it so quick and so fast, because it's going to disturb your trading plan and also disturb you psychologically and mentally, making you perform poorly in Forex trading. So quick money is always bad because it will bring you problems when trading. If you trade emotionally, Forex trading is not good for you. When you are trading, trade like a dead body. Dead bodies have no feelings. Whether you have gotten a huge loss or a win, do not be moved by that. If you depend on Forex trading 100%, trading is not good for you. Depending on Forex trading 100% is not advisable. You should have a side job or a side source of income for you to invest in your Forex account and also in your Forex journey. Forex is just like a side hustle. Forex is like learning a skill, not gambling. Don't take it like gambling, because it's not gambling. Forex is a skill. You learn the skill, you make money. You gamble, you lose the money. That's why you should treat it like a business. It is a long-term journey to learn the skill. It will take you a while. Some even learn Forex up to 5 years, 4 years, 3 years, even more. But when they don't give up, they actually achieve it in the end. That is it, traders. Subscribe, like, and share. I would like to end here for today, and I will see you in the next one. Bye.